Are JP Morgan and BlackRock buying XRP behind closed doors? That is the question that everyone in the crypto world is asking right now. There are rumors everywhere of secret wealth building, deals going on behind the scenes, and big players getting ready for the next big change in the economy. The timing couldn't be better now that the first ever spot XRP ETF is live. The market was shocked by the huge amount of trades that happened on its first day, which led to rumors that big banks aren't just interested, they're already moving in. This is not advice about money. Things get really interesting now. Robbie Mishnick and Susan Athey are two of the few people who really valued XRP in 2018. Next, what takes place? Robbie then goes to BlackRock, which is the biggest asset manager in the world, takes down his Ripple profile on LinkedIn, and all of a sudden, he only talks about Bitcoin. If you even think for a second, that's the end of his work with XRP. I can sell you an igloo in South Georgia. It's clear that there's more going on than what the news story says. You see, big organizations don't usually show their face. They talk about Bitcoin and Ethereum because it keeps them in the center, but the talk is different behind the scenes, where the real money is made. They don't want regular investors to rush into XRP just yet, as that would make it more expensive for them to get in. Instead, they play it down, draw attention away, and slowly build up. Ripple said that the reason it set up its trust system and released 1 billion XRP every month was to be open and honest. But people who knew better always thought there was more going on. Over time, proof of pre-allocation contracts came out. We know for sure that R3 got 5 billion XRP through an option deal. We know that Greg Kidd set aside 1% of the total float. The best part is now here. You may be right about those two groups being the only ones smart enough to set up option contracts. Does anyone really think that the BS, Bank of America, or the IMF didn't make their own deals? That's the difference between casual traders and people who really understand how big what's going on is. Remember that companies don't go to the open market like the rest of us do when they want to buy things. They use deals made behind the scenes, contracts, and pre-allocations. They don't slip that way. That's how they keep things secret, and that's how they get huge amounts without moving the price too soon. So every time Ripple relocks 70% of those trust releases, we need to know where the other 30% is going. But if deals have already been made ahead of time, those flows may be taken before the market even has a chance to touch them. That brings us back to the ETF. Rex Osprey's XRP ETF was the first to trade. It started at $25.82 a share and saw over $24 million worth of trades in the first 90 minutes. 5 times more than any other XRP futures ETF at start. Analysts on Wall Street said the number was surprisingly high. The Dogecoin ETF that came out on the same day as XRP didn't get much attention from investors. And this kind of demand for a controlled product is a flashing sign that big investors want to get in. Take a moment to think about that. Large investors and money managers can now get into XRP in a clean and legal way for the first time in US history through a spot ETF. That's a big step forward. That changes everything because the SEC will be pushed to accept more ETFs once one is approved. If they don't, they'll be sued and competitors will want to get in. This could lead to a chain reaction of decisions in October, with each one bringing in new money. And just as things were getting exciting with ETF news, another release came out. Ripple, DBS Bank, and Franklin Templeton are joining forces. DBS is the biggest bank in Asia and does a huge amount of trading, loans, and credit. Franklin Templeton is a huge financial company that tokenized their US dollar money market fund on the XRP ledger. This fund is called SG Benji, and Ripple is building the system that makes it all work. It's about going straight into a market worth $7.3 trillion just for money market funds. If XRP is what makes that link work, then it's no longer just about sending money. It's about becoming the tracks for world money flow. At the same time, experts are very excited about what kinds of capital could come into this market. Some people think that $10 trillion will flow into crypto in the next cycle. Even a small amount of money coming in can have a big effect on price when there isn't a lot of it like there is with XRP. That's why predictions are used. 8 billion in new money, which raised the value of XRP to many trillions of dollars. Now, it's up for question whether or not those multipliers will still work as liquidity grows. But this is what's important. There will be institutional money soon. And XRP is set up to be a key asset for liquidity in a global system where speed, efficiency, and the ability to work with other systems are no longer options. We're already seeing projects that aren't just about money. In this case, real estate on the XRP system. There are plans to add 10,000 properties to the group that are worth a total of $2 billion. Now, control is not the same as title. The real change in the market, though, will happen when mortgages, loans, and the value streams that go with them are tokenized directly on the record. The multiplier effect really starts to work at that point. There are more things to talk about than just deals. On top of XRP's infrastructure, we're talking about releasing the value of whole businesses. The big players are always making their way around. They might not say much about it, but what they do says more than what they say. Spot ETFs going public, partnerships worth trillions of dollars, and pre-allocation deals being made official in the past. Everything points in the same direction, a quiet but strong buildup. You need to think about when and how much institutions are going to get in, not if they're going to get in. Because by the time they say it, the spots will already be filled and retail investors will no longer be able to buy at today's prices. All of these puzzle parts start to fit together when you look at XRP's path with a wider view. There are pre-allocation deals, institutional quiet, spot ETFs, and big banks that are all involved in the XRP ledger. There's more to the story than just price movement. It's about building the framework, infrastructure, and tracks of a new financial system while most people are still reading about Bitcoin. That's the thing. Bitcoin and Ethereum may be the most talked about cryptocurrencies, but that doesn't mean they're the most used. Institutions are very good at controlling the story. They push the assets that they want people to focus on while making sure people see the ones that really give them an edge over their competitors. XRP has always been in the second group. Why? That's why it's not meant to be kept in a portfolio like digital cash. It's made to move money between countries and currencies and work with banks, payment companies, and whole markets. Remember when Ripple was being sued and had to deal with the SEC head on? In the background, something else was going on while small donors were freaking out. Ripple kept working to improve things by forming relationships and moving forward. At the same time, billions of dollars worth of XRP kept going in and out of escrow, and it wasn't always clear where all of it went. That quiet wasn't a mistake. It was planned. It gave Ripple a way to make deals before they were made public. The question stayed every month, even though 70% of the freed XRP was relocked. Who was getting the rest of the goods? This is where reasoning and speculation meet. It wasn't just possible for big institutional deals to happen. If Ripple was ready to give billions to R3 and millions to early investors like Greg Kidd, they had to happen. For one reason, the banks and funds that control global flows would have to agree to any global liquidity answer for it to work. These groups also don't buy on platforms that have slippage. They talk about contracts in peace. Now we are in the present. The first spot XRP ETF was a wake-up call. $24 million worth of trades don't happen by accident in the first 90 minutes. That much business means that people were looking for a legal way to get in. Analysts on Wall Street, who had been ignoring XRP for years, had to admit all of a sudden that this wasn't just retail FOMO. Institutions were getting ready. And this ETF is important for more reasons than just the numbers. It sets a standard. People who want to get their own ETFs will fight for them once the doors open. Vanguard, BlackRock, and Fidelity, they all know how much money is at stake. The biggest players will be left out if Rex Osprey is allowed to rule. That won't last long. For that reason, there will soon be a lot of applications, approvals, and launches. Each one is a new way for big capital to come in, but ETFs aren't the only thing out there. Let's go back to Franklin Templeton and DBS Bank. When the biggest bank in Asia and the largest investment manager in the United States work together and connect to Ripple's infrastructure, you're not looking at an experiment. Your eyes are on a plan for how the next phase of global banking will work. It has already been done by Franklin Templeton for their short-term US dollar money market fund on the XRP system. That isn't an idea. That is real-time interaction. What about the size of the money market? $7.3 trillion. If even a small part of that moves onto XRPL trains, the amount of cash that is needed is huge. This is the kind of move that takes XRP from an asset for speculation into an asset that people need. When institutions see that a network is moving value, they want to be a part of it. Not because of the hype, but because they have to. Banks and funds won't be able to choose another way to settle and trade tokenized assets if XRP becomes the standard. They'll need to be seen. And once exposure is required, build-up speeds up a lot. At the same time, the talk about market cap factors has caused a lot of disagreement in the community. Analysts say that in the early days of Bitcoin, every $1 billion that came in could increase the market cap by 25 to 50 times. That's how Bitcoin went through a huge jump with only a few dollars coming in. Even though XRP isn't as liquid as other cryptocurrencies, it can have similar effects, at least in the short term. When money comes in, it causes big price changes, but naturally, those ratios get smaller as liquidity grows and the market gets more stable. That's why Bitcoin's ratio is only 3x to 5x right now. This doesn't mean that XRP can't go up in value. The way prices work changes as things get bigger. That's why early stage boosters will be very powerful. Lots of money coming into a market that isn't very full can quickly push XRP into double or even triple digits. But as the number grows and trillions become common, the multiplier gets smaller. Not a negative sign. It's just math. It also shows how important it is to get in early before the huge gains are wiped out by liquidity. The tokenization of real estate should not be forgotten either. XRP projects are already adding thousands of items worth billions of dollars to the ledger. But putting property rights on chain isn't the only thing that will change things. It's also when mortgages, loans, and whole capital systems move. Imagine a world where XRPL is used to quickly, transparently, and globally finance real estate, transfer ownership, and serve as collateral. That's not just new ideas. A huge part of the world's assets are being affected, and real estate is just one of them. There are already tests going on with identity, supply lines, carbon credits, and digital currencies issued by central banks. All of those markets have the ability to be worth many trillions of dollars. All of them can run on top of XRP's technology. That's the secret story that big businesses are following, not the talk about whether XRP is going up or down 2% today or 5% tomorrow. They are looking at the buildings, making the pipes. They were the ones that could move value easily across businesses and borders. When people say that BlackRock and JP Morgan are buying XRP in secret, the real question isn't whether or not they've made deals on exchanges. It's about whether they already have enough space set aside, and the sudden rise in institutional activity around XRP, along with the history of pre-allocations and the moves of executives like Robbie Mishnick, don't make the chances very low. In fact, it fits the scheme just right. Let's be honest, when has Wall Street ever said ahead of time that they were going to buy things? Not when it came to Bitcoin. With Ethereum, they didn't. They quietly got jobs, started raising money, and then started advertising. XRP will be the same. The only thing that's different is the size. Now that ETFs are open, banks are taking part in Ripple, and businesses worth billions of dollars are testing XRPL. The stage is set for one of the biggest builds we've ever seen. The best part is now here. Most of the time, stores don't know what's going on until it's too late. When news stories say that banks are now interested in XRP, positions will already be taken, amounts will already be locked in, and prices will be much higher than they are now. That's always how the cycle goes. The people who use XRP have been through a war of patience. Years of being called crazy, going through cases, and seeing other people get attention. However, that wait is beginning to pay off in many ways. While other people chased hype, XRP's basis was being built in courtrooms, boardrooms, and behind closed doors. Now that ETFs are live and partnerships are worth trillions of dollars, all the work that was done before is paying off. Picture the dominoes that are set up right now. A spot ETF that has been allowed, partnerships between institutions and Ripple, tokenization of the real estate and money markets, and pre-allocation contracts that have been used before. Plus, there is a push around the world for CBDCs and tokenized assets. The need for neutral, effective funding is about to go through the roof. In fact, XRP is not only talked about, it's at the center of it. But before we talk about where XRP is going, let's take a step back from the business side of things and look at the bigger picture, how the world's financial infrastructure is changing. That's not all. This is also about a new set of rules for value. To be honest, most people still don't understand how big that change is. Tokenized markets are becoming more popular right now. This is not just an idea, it's happening right now. A red flag was raised when Franklin Templeton tokenized their short-term US dollar money market fund on the XRP system. That was a $7.3 trillion market that switched to blockchain. And the fact that they picked XRPL is very telling. It works. It gets bigger. It works with methods that are already in place. Most importantly, it fixes real issues, because that's what XRP is all about. It's not meant to be a toy for speculation. It was made to fix problems with speed, liquidity, and payment. that have been around for decades in other systems. Swift works well, but it's slow, expensive, and wasn't made for the tokenized age. XRP quickly gets rid of that pressure. When banks see that as a benefit, they don't care about arguments on Twitter. They want things to work well. Think about the CBDC effort. Central banks all over the world are looking into digital currencies. Some are in the middle of pilot programs right now, while others are deep in study. What's the link between them all? Interoperability is what they need. They need a neutral asset that can join their own currencies without making one system more important than the others or making them dependent on it. Yes, that's exactly what XRP was made to do. It is neutral, quick, liquid, and worldwide. This isn't just a guess. A number of CBDC projects in Asia, Europe, and the Middle East already have Ripple on board. There are some cases where the specifics are kept secret, but we do know that these pilots are setting the stage for a world where value can move across countries in the same way that information can today. And when that switch is turned on, there will be a huge desire for cash. XRP doesn't need to take the place of money. It only needs to span it. Now add in the growing use of tokenization for non-financial assets. People are testing blockchain for identification systems, real estate, goods in the supply chain, and even goods for the supply chain. For all of those use cases, there needs to be a smooth way to settle and trade value. That's where XRP comes in. As more businesses use tokens, there is a greater need for quick, neutral settlement layers. Also, don't forget about the oil markets. Energy companies tested out instant payments and settlements in some of the first Ripple tests. Just think about how big that is. The energy market is one of the biggest in the world. Every year, trillions of dollars move. The effects will be felt throughout the whole ecosystem if XRP hits even a small portion of that volume. In the meantime, the ETF market is about to go through the roof. Bitcoin ETFs showed us what could go wrong. As soon as BlackRock filed, everyone else arrived. Billions of dollars came in after that. We are seeing the same thing happen with XRP. When Rex Osprey's ETF launched, it got a lot of attention, which is something that Wall Street doesn't ignore. Files, approvals, and product openings will keep coming in waves. Each one makes it easier for more people to use XRP, gives it more legitimacy, and gets more institutions involved. What does this all mean for the price? We won't be able to give you exact numbers, but we can talk about how things work. Price changes a lot because of low liquidity and new investor demand. These ratios get smaller as capital flows get stronger, but by that time, the asset's price has already gone up again. That's the reason why businesses move quickly. They do not wait until the boosters are gone. They take quiet positions ahead of time and then ride the wave when the market is ready. We are seeing this cycle play out. Retailers argue, and organizations make decisions. And by the time the news comes out saying that XRP is now popular, the spots are already taken. That's why the signs are important. Executives are moving to BlackRock, Ripple forms partnerships with global banks, an ETF starts and sets a new record for the most trades ever, and money markets are tokenized on XRPL. These things aren't happening by chance, they're signs of a planned shift. And this is what people who have been interested in XRP for years have been waiting for. I remember the time of lawsuits, doubt, and constant references to other coins. Now everything seems different. All of a sudden, the pieces are starting to fit together. The infrastructure is up and running, partnerships are open to the public, and regulated investment goods are present. The scene is set. The real question now is not if XRP will join the world system, but when. And the acceptance curve won't be straight after it speeds up. It will grow very quickly. First one bank joins, then two, and finally hundreds of banks. First one, then 5, and then 12 ETFs come out. When one money market tokenizes, the rest of the business does too. Each brick moves the next one faster. Even though all of this is going on, many people will still brush it off. There will be a lot of noise and distractions, as well as regular charts. But people who know about the building know exactly what's going on. This play is not based on speculation. International money is being rewired right now. Think about the flow now. XRP is seen as a bridge by CBD. The money markets settle billions of dollars every day. Tokenization of real estate moves property payments onto the ledger. Immediate settlement of supply lines across borders. Real-time payments are being used by energy companies. And ETFs moving large amounts of big capital. That's not a dream. It's a plan. And XRP is what they all have in common. It doesn't sound too far-fetched to hear that JP Morgan or BlackRock are buying XRP in secret. It seems pretty clear. because it's too late for these players to wait for proof. They move ahead of the crowd instead of following it. We know from past events that once something is known, it's already priced in. That brings us to now. It's now possible to buy and sell ETFs, form companies, and use tokens. The foundation is no longer just being planned, it's being used. And the XRP ETF in first place is already getting record-breaking amounts of trades. Just think what will happen when the biggest asset managers join the fight. The gates to cash don't slowly open. They burst. That's when the environment changes from being speculative to being structural. XRP stops being just another cryptocurrency and turns into the asset that was always meant to be a bridge. Institutions will not see it as hype, but as something that needs to be done. That's when the real price changes start. Now is the time to be aware of the chance. Being aware of what's going on behind the scenes before it hits the news. Seeing the signs, putting the pieces together, and realizing that this isn't a passing fad, but a change in the whole system. There is a new financial system being built, and each partnership, ETF, and tokenized market is a part of it. XRP is the most important part of it. Moving forward, the question isn't if XRP will go up, it's how high, how fast, and how widely it's used. Once the foundations are set, institutions are fully involved, and enough people use tokens, XRP will not only be a part of the system, it will be what holds it all together. The story is still being written, but it's easy to see where it's going. And for those who are paying attention, the way forward doesn't look like anything we've seen in the past of money. I made something special just for you if you want to learn more and see how all of these parts fit together.